Hello, everybody, and welcome to Hash Rate. My name is Mark Jeffrey. My guest today is the great Vune, otherwise known as Cameron Fairchild of Subnet 14, TaoHash. Hello, Vune.
Hello. And Latent Holdings.
And Latent Holdings. Yeah,
Yes.
you have many hats. So I was actually going to address one of your main hats, which I believe is related to Latent. I'm told that you're one of the core Bittensor core devs and code maintainers. Is that correct?
Yeah, since like 2021, I've been working on like the Python stuff, and then like over time, I kind of started doing more chain stuff. More recently, it's kind of like less like on the like OTF kind of chain side, and I'm doing more like latent stuff like recently. But yeah, there's a lot of code of mine. It's kind of running right now, and when things break, it's like, oh, that's probably me.
Oh no. Well, I mean, but you're how many core devs are there that you're coordinating with for like the core Bittensor, code base?
Yeah, so the Python stuff, we have another 3 devs that are working with us, and they're doing just the Python stuff.
So when you say the Python, what is the Python stuff?
So like the SDK, the CLI, right? Like those things, right? So a lot of the other stuff is chain stuff, and we don't have anyone on that other than like when I participate with it, specifically at Latent. The other people right now are all OTF. There's a couple community members that are participating now and contributing more to the chain code. That's all.
Yeah, OTF is Open Tensor Foundation, which is sort of like the Bitcoin Foundation is to Bitcoin. Open Tensor Foundation is to Bittensor, right? Yeah. Okay. And how many devs are there sort of in OTF or associated with it, maintaining the core code?
I think it's something like it's got to be over 10 now.
Yeah.
I think at one point it was a bit more. Yeah, we have 10 members in like kind of the core group right now.
Yeah. Okay. And is it a good relationship? Would you say it's largely like consensus is largely everyone more or less agrees with things, or is it a contentious group?
Yeah, I think so. There's like some of the community people, like Ref is like he works on Subnet 12. They do a lot of community contributions now to the chain stuff and kind of like proposals, and they coordinate a lot with some of the Asia time zone devs, and there's some proposals that he puts up that people are very like not super in support of.
Got it.
Yeah. So typically they're good, and typically like he has a reason for doing them, and maybe like the implementation is what needs to be changed. But other than that, like everyone kind of like comes to consensus on things. Nobody's too out there with anything.
Yeah. And how do you guys, what's the sort of general feeling on, we're 90 days out from the launch of dTAO, and my view is that it's largely worked. I'm actually, from a technical perspective, it was a huge success, and that there was a lot of technical risk, on the back end as well as the front end. Like the front ends could have not worked. Like this could have been a nightmare, and there was no bugs as far as I could tell, which is like amazing for an upgrade of this scale, right, or this size. And so, but how do you feel? How do you guys feel? Like, do you feel like it's working the way you expected it to, or is it, or is it lacking in any way? What's the feeling?
Yeah, I think for the most part, it's been pretty good. I think there's certain things we can kind of fix, like the pools being frozen at first. Like I think that's the thing that's coming in the next upgrade. They've just been debugging things with other patches that are going into that batch. But that's super important because a lot of people are kind of, I don't know, like aping into these like low liquidity, like unreleased subnets and they're just like, it's just these insane like prices that are purely theoretical because there's no liquidity, right?
Yeah. So let me break that down for people who might not understand that, right? So when a new subnet is born, it starts off in kind of this crazy state where it's like its market cap is $1 trillion, or like something like that, right? And the coins all cost like $50,000 per alpha token for that subnet. And the idea is that it's supposed to grow into something much more sober and rational. But there are some people who don't understand what's happening sort of in the early moments of a new subnet birth, and they just ape into like these crazily priced coins, not knowing that the intent is to kill the price of the coin down to something reasonable. The chain is just doing that by its natural activities. And the reason you do that is to make it a fair launch, right? So there is a method to the madness. It's not just crazy. It's not a bug. It's designed that way so that anyone who has advanced knowledge cannot take advantage of that advanced knowledge, which I've had. I've had advanced knowledge of things. No way I can take advantage of it. So you've defeated people like me, which is the design purpose. So good. I actually applaud that. So so please continue. Sorry, I just want to make sure that was clear.
It's a super low liquidity when it starts. I think it's just 1 alpha to 1 tau, right? So it's like it's nothing, and the liquidity is so low that anyone trying to swap into it just drive the price impact insanely, right? And then you get like these huge prices, but it's all like 1 tau in the pool, right? Like at most, I guess there'd be a bit more, but it's not enough liquidity to actually mean anything. And then as we kind of go, things get emitted, liquidity builds, and you see these prices fall insanely, right? Which is, yes, the design. It's just so nobody can kind of front load in like a pre-mine kind of thing.
Yeah, no slimy VCs, no insider trading. Like everybody, all the bad people get defeated. So I completely applaud the design. It's great.
Yeah, that's the goal.
Yeah. Okay, so let's talk about Subnet 14 TaoHash. So this is a relatively new subnet, and the basic idea is the miners are mining Bitcoin. So they're Bitcoin miners, and they give up their Bitcoin. We're going to talk about where it goes, but they give up their Bitcoin, and depending on how much Bitcoin hash rate they supply to the subnet, they instead earn Subnet 14 alpha tokens. So that's the general idea, correct?
Yes, that was very good actually. A lot of people get confused about it, but yeah, it's basically just replacing the concept of like an FPPS mining pool. Where if you're not familiar with FPPS, it's fee pay per share, where it's basically you do a unit of mining work that's like a standardized amount of work, and then when you submit that to the pool, they immediately credit you what the expected value would be given like the current fees on Bitcoin, the current block reward, like the subsidy, right? They kind of get this expected value of like, if we were to find a block and with this likelihood, current difficulty, whatever, this is what your share of this exact amount of work would be worth, right? And they give it to you, and then they typically take a cut of the final amount that you have, right? So that's how they maintain it, because there's this capital cost, right? Because there's they have block luck, which is how often and how likely you are to get an actual block and to actually get those Bitcoins that you're paying up to these miners, right? So if you don't get one, you get extremely unlucky. No matter how much hash rate you have, you can get unlucky for long streaks, right? This is a bunch of Bitcoin you're potentially paying out that you don't have, right? So there's that capital cost, and they're trying to recoup it via that pool fee, right? Which I think Brain's pool is 2.5%. A couple other pools are up to 4%. Which is I find is quite high.
Wow. Okay. Yeah. So this is the way all the big Bitcoin mining pools operate, right? So now the biggest mining pool in the world, I believe, is Foundry, which is Foundry, which is Barry Silbert's mining pool, and Barry Silbert is a big fan of Bittensor, right? So. So he should love. I would think he would love this, right? He must look at this and be like, "This is fantastic! It's 2 things I love and 1 candy bar." Right?
Yeah, exactly.
So, okay. So let's talk a little bit about the confusing parts of Subnet 14. So I'm a Bitcoin miner, and you show up on my doorstep and you say, "Hey, so Bitcoin miner guy, right now you're earning Bitcoin in this pool, but how about you don't mine the one true coin?" Or how about you mine the one true coin, but you don't actually get it? Instead, you get my heathen, pagan other coin, right? Like, and I say yes. Now, why in the world would I say yes to that? Is it because I'm betting that your subnet token will be worth a lot more down the road? Is that the basic idea?
Yeah. So there's that element of speculation, right? But a big part of it, like just the simple kind of like, if you sold it all immediately, what it would look like is, if we're able to undercut this pool fee and like be anywhere below it, now you as a miner are getting more out of it, right? You also get this immediate alpha, so you get these immediate withdrawals. So you're benefiting twice from that, right? You don't have to wait this period, like Brains makes you wait until 9 a.m. UTC to get an automatic payout, right?
Oh.
And like all the other pools have their own way of doing it. Some of them charge fees when you withdraw. Right. So there's the benefit of that already. And then there's also alternative revenue streams that the subnet can do that are based on like block space. So there's this concept in Bitcoin block space where you're just saying like a lot of people say ordinals is a huge thing. I don't know if people are
Yeah.
with that.
I've actually played a lot around a lot in that world. So yes.
Yeah. So ordinals require block space, and ordinal issuers often pay mining pools to get block space.
Yep.
And they're willing to pay a premium to get their transactions included. And sometimes they'll actually MEV, right? So like the same way in like Ethereum, if you want to get your transaction to the ordinal first or for the Bitcoin L2 first, right? You might pay more, right? So there's this revenue stream from that, and then mining pools typically don't distribute that to the miners, right?
Oh,
so
really?
Yeah, so that's something you can kind of get off of. I'm not sure if all of them don't, but these kind of like revenue streams that are available. There's also there's this company called TaoHash, which I'm always surprised when people haven't heard of it, because like I've been Bitcoin mining like as like a hobbyist since like I was like about 12 years old, so like very very hobbyist level. But there's this thing called TaoHash where you're able to direct hash rate of typically it's altcoins. A lot of people do Bitcoin. They have something like 4 exahash on the marketplace right now. But what they do is they take the hash rate you're sending, and then they proxy it to the highest bidder for the hash rate, right? And then the idea is these people that are bidding on hash rate typically pay like a 5 to 6% margin on the actual hash price, or the expected value, like I was talking about earlier, the expected value of it, and they pay a premium. And the idea is either they're using it kind of like a future, where they're hoping to get Bitcoin for a higher price when they actually get it than what they started the contract at, or they're trying to get just exposed to block luck in general, right? So it's kind of like a financial instrument in that sense.
Super interesting. Yeah, I mean, the stuff you were talking about, the ordinals, I was around when BRC-20s were born, and I played around a lot in that world. And there was a little moment in history, Ordi was the first one that was born, and then like a whole slew of BRC-20s were born afterwards. And Unisat actually pioneered the user interface, which made it feel like Ethereum, right? And so for the first time ever, you could have meme coins and whatever, mostly meme coins on the Bitcoin blockchain natively. And for a period of like maybe a month or so, like 80% of the hash rate was going towards something like 80%. I don't remember the exact amount, but it was by far the majority of the hash rate was going to transaction fees for block space to store the ordinals, the BRC-20s, in the Bitcoin blockchain. Right. And this was great for Bitcoin miners. It was massively awesome, right? Because they were getting way more fees than they normally would. But based on what you just told me, it sounds like the pools actually were the ones who made out on that.
The pools typically they'll pay out the transaction fees, but like anything on top of that, like beyond the native transaction fee, a lot of times they can keep that, right? Or like block like transaction acceleration. They have a lot of acceleration services now. There's I think via BTC was like the first pool to kind of do it, but it's this thing where like you get this transaction and it's very time sensitive, right? So you go to these acceleration services which help rent out this block space and with a priority on it, right? So you overpay typically above the normal transaction rate just to get included, and it doesn't involve actually paying the native transaction fee. So typically they'll either keep it or they involve it in some way in the miner rewards.
Got it. Okay. So let's go back to Subnet 14. So if I'm a Bitcoin miner and I decide to instead give up my one true coin and go with Subnet 14 alpha tokens, do I get the same amount in dollars of alpha tokens that I would have gotten Bitcoin mining immediately? Is that the way it works?
Yeah. So there's obviously going to be like sometimes over contribution of like hash rate to the subnet.
Yeah.
So when you go above the actual market value of alpha and the emission that is coming out to the miners, right? Because we can't increase emission. We can only give emission up to a certain point. We can only do the one alpha to all the miners and validators and owner every block, right?
Yeah.
So once you go above that, that's where you get like you're starting to get less, right? But then there's that level of speculation. It's not fully transparent to the miners what everybody else is doing, right? So there's that level of competition, and there's that level of assessment and strategy kind of you have to use, right?
Yeah.
But for the most part, we should expect this market equilibrium to happen whether or not we decide to burn miner emissions or not to like force an equilibrium, we should be seeing people kind of contribute until they're exact, like just in profit, right? So just getting over that pool fee, right? Getting the amount of alpha that they would have expected Bitcoin mining, right? You're going to see that kind of market equilibrium happen, and we actually already are seeing that happen a lot. So the hash rate being produced is more than the alpha emission, or roughly the same, and which is pretty cool to see.
So the math does work out, because I've seen some in certain circles I'm in. Some people are saying quite literally, the math doesn't maths. But listening to you speak, I think the maths do math. Yeah, that seems to be what you're saying. Yes,
it's the same thing with like any subnet. It's, miners have a certain cost that they pay to produce the commodity, right? And alpha is actually worth a certain price, right? So the amount that you're paying the miners is going to be different depending on what the current price is, right? Depending on the level of speculation and everything. But miners are always going to try to reach this equilibrium where they're in profit, right? Because they're going to be competing against each other. People are going to be shutting off their rigs when they aren't in profit anymore, right? Or just reducing hash rate. With Bitcoin, it's very easy because you can kind of direct it, right? Or you can do those shutoffs of just shutting off the power, right? So it's this thing that's fairly fluid. But there's that slight delay that they get from like the commit reveal as well. We already have miners looking at like the weights that validators are setting on them specifically and adjusting our hash rate based on that, right? So you get all these kinds of games and these strategies that people are using to try to like meet that point where they're in profit.
Yeah, I mean, it seems like, okay, so basically I'm earning roughly the same amount or more maybe. Yeah. In mining in Subnet 14 as opposed to just straight up Bitcoin mining and getting real Bitcoin, but there's the additional bonus of if you're a Bitcoin miner, it's a hard business, so it's hard to make it profitable, right? Especially, I think my personal opinion is that Bitcoin should be worth like 250K right now, and I think many of us thought it kind of would be, and it's not. It's worth a schlumpy 100K, right? Which is
only
only, but also only because I really did think it was going to be worth about 250K right now. And I think it is going to get there, just taking longer to get there than we all thought. But if you're a Bitcoin miner, the hash rate is climbing, sharply, but the price is not going up the way we all expected. So it's a very hard business. So, what's Bitcoin going to go up in the next year? Maybe 2x, maybe 2.5x. But I think I think we all know that's sort of the uppermost limit of where it can go. Whereas the alpha tokens in Subnet 14, depending on what happens with Bittensor in general, a lot of different factors. But I would say, I would guess within a year, 10x it's possible, right? And 2.5x feels very doable. It's of course all speculation. Yeah, but that's the way it feels to me. That's my opinion. It's not financial advice, but it is my opinion, right? So if I'm a Bitcoin miner, like that feels a lot better to me than straight up Bitcoin mining. Like I don't lose anything. Like the worst case is I stay even to what I would have gotten in Bitcoin. The best case is I 10x. Does that sort of capture the risk reward?
Yeah, I think a bit. I think it's good to not encourage insane speculation, but I mean, there's always miners who are going to speculate and buy continuing to hold the alpha instead of selling it off immediately, even if it's a part of a small portion, right? You can stake it, right? You can stake it as a regular staker, and you can start getting more alpha out of it, right? So you're getting a bigger piece of the pie than you kind of would have had otherwise.
Right.
And then, that's some incentive to just kind of keep the alpha, right? And of course, Bitcoin mining isn't the only thing we're looking at doing. It's supposed to be this general POW thing. Bitcoin is kind of I don't know, it's the thing you start with, right? I wouldn't start with something else.
Yeah.
But there's this concept of it's called a multi-pool. There's different things multi-pools do, redirect to different streams, right? But there's also this idea where people mine altcoins, right? And similar to the nice hash thing, it's people mine altcoins, but they don't want this altcoin, right? They mine say Litecoin, but they don't want Litecoin. They just have a Litecoin miner somewhere, right? But other people do want Litecoin. So what they do is they automatically get the pool to automatically just swap it for whatever they actually do want, right? say they want Bitcoin, say they want Monero. Monero is a very popular one because Monero is notoriously difficult to mine and profit. It's if you don't have a botnet, you're basically like screwed on that.
Yeah.
Right? So people will mine. There's a hugely popular pool, Monero Ocean, where you just throw altcoin hash rate at it, they sell it, and they take a premium on that exchange, right? And they give you this Monero, right? Now the Monero is untraceable, right? So there's this privacy element of why you want the Monero, right?
Yeah.
And they're willing to take this premium on the exchange because they're getting it immediately, right? And it's this kind of like this DCA process happening from having the actual miner with you, right, through your electricity, right? So they're getting that profit of the Litecoin mining in general, but they're converting it immediately into something they believe in more, right? And there's a bunch of pools that kind of do this, but there's no reason why we can't kind of adopt the same model, right? Like we could have people mine Litecoin and have a slight premium, right, of the Litecoin hash rate being produced, like the expected value. And then they can use the alpha they get to swap into whatever, right? They can swap into TaoHash immediately, right? A lot of people want TaoHash, right? And then over time, as we're getting like these mining rewards, we can potentially set up like liquidity pools with alpha, right? Like with our alpha. So you could like swap your alpha that you're getting with whatever other people don't want, right? And then there's even another pathway there to taking swap fees, right?
So you set up like an exchange for all the
Oh,
interesting.
You're generating liquidity, right? So it's you might as well do that, and sometimes it's hard to swap for TaoHash otherwise as well, right?
Right.
This was something we've been running into as like we are offloading the Bitcoin that we mine to our validator. We're converting it into alpha, right? But it was hard to swap from Bitcoin straight to TaoHash because there's no pair for that on a lot of exchanges, right?
There isn't. I've looked for that too.
You're potentially paying a huge fee. And then there's also like the lack of liquidity of like the TaoHash on the exchange versus Bitcoin, especially. So there's that price impact, right? And then you get a huge spread potentially. So making that easier just by putting up pools is like totally something we can do. And
Kraken's the best place that I found, but it's still early days over there with respect to the TaoHash part of it, right? So, but they do have they don't have the direct pair; they have USD TaoHash. So if you want to go from Bitcoin to TaoHash, you got to go Bitcoin, USD to TaoHash, and take a bite twice on the way by, right? So it's
and then when you withdraw, and another fee.
Yeah, another fee there. So I mean, I get it; it's their business, but that's it's not what I want, right? So I want like Curve. I want like TaoHash to I don't know, I don't know how you do it because that's like a cross chain curve, but that's what I want, right?
Yeah.
So let's go back to the mined Bitcoin because this is a point of a lot of confusion. So the Bitcoin is mined by Subnet 14. Where does it go? Who gets that Bitcoin?
Yeah. So the way it works is just like any other subnet, where the idea is the validators by stake weight are getting access to the commodity. It's the same thing, right? The hash rate is directed by the miners to each validator's published pool. And they do it. Most of them do it on this time-based like time interval, so they can weight it based on how long they spend on each, right? And that's how they get you do 5 minutes for the lowest stake or for the 5% stake, and then another 10 minutes for 10% stake, right? So you just switch 100% of your hash rate, right? And you just kind of point to different ones, right? And then that hash rate is just going to the pool of whoever the validator hosted on, right? Right now, all of them are hosted on Brain's pool right now, which is not ideal, but it had the best API for starting out. But we're working on a rewrite of the proxy we use for miners. We're working on a rewrite of it to do a custom proxy. That way we can put it to whatever pool, including a solo pool, and we can still do all the accounting of like the hash rate that's actually being produced. And then that way we'll be able to host a pool like on our own infrastructure and just solo pool it, right? And then we'll get blocks on Bitcoin saying like mined by TaoHash, right?
Yep.
Right. Or we can proxy it if we resell it, right? So it's this more flexible thing than what we're doing right now, but it's a good like first step, kind of bootstrapping.
So wait, so the validators are the ones that's the party that gets the Bitcoin. Yeah,
so the validators get the Bitcoin, right? So just like any other subnet, get the commodity, right?
And the validators, and you get it, and it's proportional based on
their stake weight.
Their stake weight. So how much TaoHash is staking your validator?
How much TaoHash, how much alpha, right? And like the relative value of each, right? Because TaoHash is weighted down a bit, right? So it's that it's basically just the amount that they influence the miner emissions, right? So it's how much their vote counts.
Yes.
Right. Which is why you'd want to prioritize them to a certain extent, or to give them a certain proportion of what you're producing.
So the validators all so when they sign up with their validator, I guess, software, it comes with a Bitcoin wallet address to direct the Bitcoin emissions that they're getting.
Yeah. So they post their pool info.
Yeah.
And then we already have integrated the Brains pool API. And when we do the proxy, we'll have a similar API to pull from. But they just post their pool info, the miners mine to it, and they put whatever their worker name is going to be. It's something to do with their hotkey, and then you can match who it is, right?
Yes.
And they can direct as much as they want because it's aggregated under the same ID, right? But whatever they produce and whatever's going to the pool directly, and all the shares that are validated by the pool, that's how you know how much everyone's done, right?
Got it. Okay, so now I know where the Bitcoin goes. Now I saw JJ post something where I guess a validator that you guys run mined a full block for the first time, right?
Not a full block.
Wasn't a full block. Okay, no, sorry. I thought it was a full block reward. So go ahead.
No. We got 1 Bitcoin when he posted that, I think, and we produced a bit over 4 Bitcoin just on our validator as of now. I think it's actually higher now if I check live. We produced about 4.9 Bitcoin on the pool currently.
Wow.
And that's just our validator, right? So
yes.
We represent something like 28% of the stake weight, right? Obviously, over time it was higher, right? Before it was higher, and it's kind of, gone down a bit. But now, there's still 100% stake weight, and validators have been getting this hash rate roughly based on that, right? So you can kind of expect there's going to be something I think it's 5 to 6, all time across the entire subnet, Bitcoin have been produced, right? But this is all over the pooled mining, where we're using a different pool provider to do it, right? But once we start solo mining, right, this Bitcoin isn't going to happen immediately because we're on this block luck, right? But we're going to start getting the full amount of it, right?
Ah, okay, right.
Yeah, so, and we'll get those transaction fees, and we'll get the entire block subsidy, right? And we can start working with providers to pay for extra block space, right? Transaction accelerators.
Very interesting. Okay, so and just going back to the other proof of work coins for a second. So I there was a little point in history where I had never done mining before, and I started talking to some guys that were behind a proof of work coin called Lucky Coin. And they were resurrecting. You've heard of it, right? So they were resurrecting it. It's an old coin, and apparently, when people decided to fork Bitcoin, they forked Bitcoin into something else. I forget what it was, which was then forked into Lucky Coin, and then Lucky Coin was forked into Dogecoin. So Lucky Coin is it actually predates Dogecoin. And Lucky Coin kind of died because nobody cared about it. So the blocks just stopped being produced because all the miners left, and we're on to other things like Coin and Dogecoin and whatever. But these guys noticed that sort of in the genealogy, Lucky Coin does appear to be the world's first meme coin. So they're like, well, this is valuable, so let's boot it back up. Yeah. So they talked to me for hash rate, and I was like, okay, I don't know if this is anything, but whatever. It's really easy to mine. And so I'd never done mining before. So I actually got a mining rig and learned my way through the whole mining thing. I rented one. Obviously, I didn't put one in my basement. Wasn't that deep into it, but I did go rent. The mining. I went to all the mining rig rental places. Tried a couple of them and mined a bunch of Lucky Coin. And I saw that you could actually merge mine Lucky with Light with Doge. There were a bunch of them that you could sort of mine at once. And I think that's what you were talking about earlier. Is that correct?
Oh, that's a similar concept. I was talking more about the exchange process, but multi-pools, there's a lot of them that are known for the merge mining.
Yes.
They started doing merge mining because you'd have these other coins with the exact same algorithm, right? But they're not as popular. And you get miners just move huge amounts of hash rate like suddenly, and then take advantage, because once you have over 51%, you can start printing blocks, right? So if they did merge mining, then they could get miners on the other network with more to contribute some of the time to them without actually affecting the hash rate on the chain that's more popular, right? So the Litecoin miners could double mine both Litecoin and Dogecoin, right? And then the idea is now you get this added hash rate for Dogecoin that would have otherwise been only on Litecoin, right? So you have this security, right? So you're resistant to these attacks and people moving huge amounts of hash rate.
Yeah, got it. Yeah, that's very interesting. So, okay, so let's talk about sort of the heart of the matter. So, in the Bittensor universe, right? Like the actual mission statement, in the white paper. Hang on, I just got it right here. Let me pull it up. I read you a little quote from your own white paper. Bittensor is a peer-to-peer marketplace that rewards the production of machine intelligence. Blah, 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 blah. Anyway, basically it says this thing's supposed to be used for AI.
Yeah.
Thou shalt not use our chain and our bullshit for things other than AI. However, along come you and JJ, and you set up what some regard as a Bittensor abomination, right? Like, it's not how dare you use our permissionless blockchain for something that we didn't intend it to be used for, right?
It's without sort of permission, yeah.
Yeah, but I mean, there are some people who are saying like this is an abuse of the chain. Nobody intended this. This isn't providing any value. But then again, you're one of the high priests of Bittensor. There's 10 of you they're sort of guarding the heart of Bittensor, right? So it seems kind of hard to accuse the Pope of heresy, right? Is sort of what it feels like to me. So what is your response to people who have this negative opinion of Subnet 14?
Yeah, I mean, I think we started out I didn't start Bittensor, but Bittensor as the network kind of started out as like this AI thing, right? And like the whole idea was centered around like how do we incentivize machine learning and machine intelligence, right? Yeah. But I think now it's kind of abstracted beyond that. And I think a lot of people don't really see that. I think TaoHash is just one like kind of pure working example of it. But there's no reason why we can't, apply this model to other things, right? Like the Dojo subnet. Dojo is the one by TensorPlex. I think it's subnet 52. Yep. If I'm right. They do contribute to machine learning, right? They have people do human labeling of data, right, and like outputs of models, and that can be used to train models. But there's other things that it's useful for, right? Like that actual like having humans complete a challenge. You could totally apply captchas to it, right? And like this and follow the same kind of like method that they're doing, right? And that's not directly machine intelligence, right? You don't have to use it to train anything, right? Yep. And like, why not, right? Like it's working. It's in the paradigm of the like this challenge response, right? And this fuzzy ranking of the miners, right? This immediate reward for this thing that they're producing that's valuable in aggregate, right? It's got all these properties. There's no reason why we shouldn't be using this framework to incentivize it, right? And then there's other things like that. Like there's the file TAO one, which was the first one. Doing file storage. Now there's Storb. There's Hippias, right? Yep, Hippias. I'm sure there's another one, but like they're doing these things that aren't they're not directly intelligence related. In fact, they could be used for things that aren't intelligence, like probably primarily, right? We don't store most things we store aren't like machine learning related, right? Right. But it's this thing that you can do and you can organize people around that is producing this thing of value, right? So it's like, why not apply it to other problems, right? Yeah, when I saw Storb and Hippias, I'm like, wait, that's Filecoin. That's like, I don't think it's AI anything, right? Like I was confused because I was looking for the angle of AI, and I'm like, I don't think there is one, and it turns out there isn't one, right? So, so what I hear you saying is that Bittensor, started AI. However, what it really is a incentivization network. Yes. And so it's sort of expanded its mission. It's mostly AI, but it's not constrained to just AI. And there's some voices who have a problem with that, who think that should not be the case. And there are other voices who say, yeah, dude, it's incentivization. It can be applied to file storage. It can be applied to Bitcoin mining. And there's probably like 50 million other things it can be applied to that are sort of, use that similar thought process. And I tend to, my personal opinion is look, it's an open, it's a permissionless blockchain that has some rules associated with it. So if somebody gets clever with them, good on them. I don't have a problem with it, right? I just think let's see if there's a marketplace. Clearly, you've created a marketplace where you have told a bunch of Bitcoin miners have decided to give up their Bitcoin in favor of your alpha token. Like, that's extraordinary. And that's a completely market-based activity. And then another marketplace, that of the
dTAO alpha token holders has come along and have bought your tokens, and driven your market cap up. You were like I think you were number 2. I'm not sure if you still are, but you went from like nothing, like it didn't exist, to the number 2 subnet in like a couple of weeks. It was crazy to watch, right? So, I mean, congratulations. But, I think the market, and multiple participants in that market decided that you were producing value, and the math must work. Otherwise, those people wouldn't, they wouldn't participate. They'd leave.
Yeah, exactly. And the market's always going to decide if the math works, right? Like you saw today with Subnet 8, just straight down, right?
I did see Subnet 8. We'll talk about that in a second. Go ahead.
And that happens because people have the choice, right? People can do this, right? I think it's interesting that we're going to see like some resistance to the price movement soon with like the liquidity positions coming in, like native liquidity positions on the swap pools. And I think that's a super important thing because it just seems like a DeFi kind of thing that we're adding, but really it's this further expression of like weighting of these subnets, right? You're saying I expect it to be within this range and I have confidence in that, so I'm going to place liquidity around that, right? It's the same thing as just buying it.
Oh, so wait. So I this is new information to me. So you guys are doing sort of a Uniswap like thing?
Yeah. So it's already AMMs doing like Uniswap. I think it's V2, right? The Uniswap V2 pool.
V3. I think
and
V3
now
is the
we're
one.
going to be Uniswap V3, which has a liquidity pool.
Yes.
Right? Yeah.
Yes.
So we're following basically the same concept, like the same structure and different formulas they use, right? The general algorithm they're using, but we're doing it in Substrate. We ported it. We're working with like these guys doing research specifically on how best to produce it, right?
Yes.
And it's going to provide this more flexible kind of economic language of like value, like your placement of value on these different subnets, right? And we're going to see less price volatility, and I think it'll kind of mature more the ecosystem.
Yeah, the ranged liquidity. So for those who don't know, because this is something I actually do understand amazingly. So Uniswap V2, super awesome, but when you provided liquidity, you were in a lot of danger of something called impermanent loss. And what that meant was, you have to supply liquidity in 2 coins, in 50-50 ratio. But if one of the 2 coins suddenly, ramped up, 10x overnight, you basically lost like half your money, bottom line, like compared to if you just held those 2 coins and didn't supply liquidity, so if one of them ramps up real fast, you lose sort of, you don't get half that ramp up. You lose half of it because you're in this 50-50 relationship. A lot of people didn't like that. They were like, oh my God, this sucks. I lost a lot of money, right? From providing liquidity. You're supposed to be making money on transaction fees, which most of the time you do, but crypto is volatile, and these spikes, both up and down, happen frequently. So a lot of people were just like, I don't want to provide liquidity under those terms. So Uniswap came along with Uniswap V3 and said, okay, I'll tell you what, your liquidity only applies within this range. So, if basically, the coin goes up too much, all of a sudden you're unplugged from the liquidity, right? You're not suffering the impermanent loss. So I describe it correctly?
I believe that's right. Yeah.
Yeah. So you're basically supplying. So you're now introducing these concepts into the on-chain AMM that is baked into the Bittensor blockchain.
Yeah, because right now you can't even supply liquidity like V2. We're just doing the liquidities from the chain, right? The chain is just emitting like new liquidity, right? But soon you can just add as much as you want, right? You can put these positions on.
Right. That's true. There are no LP tokens in Bittensor. Now you're going to introduce LP tokens, liquidity providing tokens, so that, so anyone can provide liquidity in the same way they would provide it to Uniswap. Very interesting. Does this rely on the EVM at all, or is this sort of native?
No, this is a fully native, like written. I mean, people can probably wrap alpha on the EVM if they wanted to, and kind of basically just use the Uniswap contract. But this will be like a native implementation. So it'll actually use like the native substrate calls, like, and all the functions underneath.
Got it. Very interesting. Okay, I did not know this. This is new information to me. So thank you for that. Okay, so let's talk a little bit about Subnet 8, because that just happened, right? And it's on all of our minds, right? So there's a subnet called Proprietary Trading Network, and its purpose in life is to mine trading intelligence. And it's, there's some debate on whether it's doing it in a good way or not. My personal feeling is that the people behind it are serious people. It looks to me like they, in fact, are trying to do something valuable. I don't know whether they're succeeding or not, but I think they are trying. And the idea is that you will get this artificial intelligence that maybe combined with mechanical Turk intelligence, which predicts the price movement of coins and stocks and other things with more accuracy than throwing a dart, right? And hopefully with some very good accuracy. So there were a lot of people that were gaming their a lot of miners that were gaming their network, allegedly. And so, the subnet owners were like, okay, we have our incentives set up wrong. So we're going to change them. And it's basically in a way where the miners are getting cut 90% of what they were making before for kind of doing bullshit, which I think everyone sort of agrees was happening. Miners didn't like that. And so a whole bunch of them sold off this morning and crashed the subnet token price by about half. And there's some people are saying that was a coordinated movement. I don't know. So there's some voices saying that, other voices saying, nah, it's just, they held a community call and that's just the market deciding. So Cameron, what are your thoughts on what just happened?
Yeah, I mean, I'm not too versed in this, like the inter community of of Subnet 8, but from what I've seen, they kind of announced they were doing something, and the people who held a lot of it, which are typically the miners, right, did not like that at all.
Yeah.
Right. Like you don't sell off a token to destroy the price immediately like that to benefit anything else. You can't, how do you benefit from that beyond you're trying to get out, right?
Yeah.
Trying to kind of escape. So I don't see a malicious, I don't see how you could kind of make this a malicious thing. I don't know how you could do that.
There's no reason other than just,
there's no reason other than, I don't believe in
vandalism.
Yeah. Right.
I mean, if you're really that angry at the subnet owner, I guess,
Yeah.
But you have to light yourself on fire to light them on fire.
Yeah, exactly.
Yeah.
And I think a lot of people were saying if the miners aren't, producing something and they don't have confidence anymore in this subnet, right? And the incentive mechanism that's going on, then that's kind of your lifeblood of the subnet, right? That is who produces the commodity that you're saying is valuable, right? So if they're not into it, why should anyone else be into it, right? So I think it kind of drove more people to do the same, right?
Yeah. Okay. Well, thank you for that. So let's talk a little bit about another sort of controversy which has arisen in the Bittensor universe. And I think the leading voice in this controversy is David Fields, who is the leader of Subnet 33. And, basically when when dTAO was sold to all of us, was explained to all of us, including me, we saw this graph that kind of did this, right?
Yeah.
And we, and up here, this is, basically if you were before dTAO, you know what I'm talking about. So before dTAO launched, everybody could stake their TAO tokens with Root and earn 18% emissions roughly, right? That was sort of my observed amount. Just stake it in Root, go to sleep, you get 18%. Very cool for you. After dTAO launches, the intent was that 18% would start getting driven down towards 4% ish. It looked like to me, and then the only way to sort of get sweet emissions were to be bet on the right subnet tokens, right? And you could lose everything, or you could profit wildly, both in terms of subnet token appreciation, as well as the emissions that subnet token just naturally gets. So that's not what happened though. So here we are 90 days later, and the Root emissions, if you stake in Root, they were around 25% is what I'm sort of observing right now. My understanding of the reason why that's happening is because the rate of new subnet creation has increased. And during sort of the early moments of a new subnet birth, it gushes emissions to the Root stakers.
Yeah.
Right. Like this. And I'm not quite sure why that happens.
Based on the price. So the sum of the prices of the subnets, as it gets higher than I believe it's 1, as it gets higher, it actually it sells off more to the Root network, so they get more emission out of it. Right. So yeah. So as the prices have gone up more than kind of was expected, right, or kind of was modeled, you see a higher root API, right?
Oh, so because everything's working is better than what everyone thought.
Well, you could see it that way, or you could see it as maybe it's been too quick, right? Like it depends on like kind of your lens on it, right?
Yeah.
I think it's definitely something that like should be kind of looked at and like modeled out.
So let me get to the question because I have an opinion on this. So I mean, it feels like what's the root emissions are too high, right? And the root emissions are too damn high, right? Like that guy who's the rent is too damn high. The root emissions are too damn high, and David's basically saying, look, there's no real motivation to get out of root. Right, you're living in your parents' basement. They're paying for everything. In fact, now your allowance went up. It was supposed to go down to force you to get out and get a job. Right, start betting on some subnets like a regular human. But instead, the welfare root, filthy root stakers are making more. So, is root getting too much emissions? Do you think the model needs to be adjusted, or what's your opinion on this?
I definitely think it needs to be considered. I think there's an argument that like all these things existed, right? And these mechanisms existed before people started kind of going into like dTAO and allocating in. So there's that argument for like this existed before, right? And this is all what everyone's been working with, right? So maybe people should have expected this to happen, right? And that's kind of the game everyone was playing. We're all playing with these rules that were predefined, right? And we kind of knew the outcome should people allocate this much in this like this quickly in the schedule, right? We expected this to happen because that's the rules that were defined, right? So it's like, how is it fair to change the rules? I think David said in the Discord today, he was saying like, there's obviously going to be two camps of like people who are in root right now getting this APY that is improved, right? They're obviously going to want it to stay the same, right? And then there's people who are in dTAO who are not getting the APY that they thought they would be getting, right? And they would want it to not stay the same, right? And then there's people asking for governance and like maybe we should do a governance vote. But how do you weight that, right? Because probably root will have a higher weight, right? Right. How do you?
So the freeloaders are going to vote for more free stuff.
Yeah. So
of course
how do you apply this governance, right? You got to come up with a fair way to do it. I think it involves a community discussion. I think it involves like key people in the network, like subnet owners, miners, validators. Everyone has to kind of like decide on something that everyone kind of considers fair, right? Because there's one thing to say like majority rule, but majority rule only really works when people are like, I mean, in the worst case, people are afraid of the majority, right? But
sure,
for the best like kind of way to be as a network is everybody is kind of happy because of this compromise, right?
Yeah, I mean, so it feels to me that this is the way it was sort of pitched. Like you're saying, we're changing the rules, but for understanding that this was going to happen, I think was beyond the comprehension of most people in the ecosystem. It's my opinion. That's what I've observed. Yeah. It was beyond my comprehension. I read through the white paper. The white paper's got all kinds of crazy math. I'm like, oh, I fed it into Grok. Like, what does this say, right? And as far as the heads or tails I could make of it was that, in fact, that we would have decreasing root emissions by now. 90 days out, like it was at 18%. I figured by now it would be like 9%.
At least under 18, yeah.
Yeah, it would go lower. Like maybe be 9% at this point, maybe not 4%, but like 9%. Like you're starting to feel the heat a little bit if you're a root staker to get out of your parents' basement, right? And that was the vision that was sold, I believe. And I guess I didn't understand the math. But the math is incredible. Like what's going on under the hood is insanely complex, right? Because there's all these weights and things, and there's not a simple explanation of like how all this stuff is calculated. I even asked Mog like on this show, who is pretty, he's a smart guy, and he knows he's been in this thing for a long time, and his answer was basically like, well, that's why I built Tau stats, because it's impossible to know. It's impossible to predict. You can only look back and look at what happened and then use that to predict what's going to happen in the future, right? You literally had to make a whole product to figure out like how to predict the future, right? Based on past performance. And I don't blame him, because that's sort of been my observation as well. It's like, it's really, really, really hard. I'm sure that the PhDs or whoever who came up with this understand it. And, but the rest of us, somebody has to explain it to us, right? So I don't know. I'm sort of, I hear what you're saying. I don't know how you make this decision, but I feel like it's weighted wrong right now. And I feel like I feel like Fields is fundamentally correct that there should be some adjustment here somehow. But I'm with you. I'm not quite sure how to do it. I think you bring up a valid concern.
Yeah.
But Rome observed that the plebes always vote themselves more money and bankrupt the treasury. So we can't let that happen.
Yeah.
So if subnets work, then all of TaoHash works, right? Like the value of TaoHash has got to be a function of all the subnets. So if for whatever reason that free market mechanism is truncated, maybe it's working, but it's working in a crippled way, which is, I think it's working quite well, but it is crippled. That's sort of my opinion of it right now. So, so anyway, I hope we figure out a way to get through this.
Yeah,
all right. Well, I think you've done a very nice job of explaining what you guys do and where this is headed. And it was really great to get your insight on a number of Bittensor topics. Is there anything I didn't cover that you wished I had that you want to bring up now?
I think like in the topic of like dTAO, like there's this thing like people are talking about like people allocating their TAO and how much is on root still, and I think there's an important conversation a lot of people are kind of not having is like this idea of like OG TAO holders, right? And those that respect taxation law in their relevant jurisdiction, at least those with like cap gains tax, right? There's kind of like a roadblock maybe or a barrier to some of them allocating. Right, the ones that actually declare these cap gains or consider alpha, like obviously this is not financial advice, not legal advice.
Yeah. No,
I don't know anything about taxes, right? But there's potentially this unrealized gain that they will now have to realize should they want to allocate into alpha, right? They're now doing a swap and they're realizing a gain. They're going to have to pay tax on it, right? And then all of a sudden you have less TAO than you currently have, and you're getting less APY or less amounts from the APY, right? So it's maybe people are also hesitant to start allocating, right, because of this upcoming tax burden, right? So it's maybe we have to find ways around this, maybe through financialization of things or other means. But I think that's probably a barrier right now. I think maybe as we see TAO price kind of decline, God forbid, right, the TAO price decline, people are going to have a closer to cost basis, and then maybe they'll be more likely to go into dTAO. Right, so it's like all these kind of like non directly financial elements, like non like straight math.
Yeah, like taxation elements.
Yeah, these social kind of like governmental influences that you're not even aware of, right? That I think are probably affecting these very things.
Yeah, so right now, at least last time I looked, like 7% of TAO is allocated to subnets, to dTAO.
Yeah.
Right. Which is a very tiny percentage, right? Like 66% is still, they're filthy root stakers, as I like to say, living in our parents' basement. So, clearly they're not motivated to move out. And then the remainder is basically just sitting in wallet somewhere. But most of that is like in Binance. It's liquidity in centralized exchanges. That sort of the bulk of it from what I've been able to trace. We'd like to see some of that reverse, right? Like we want to see 66% of it, maybe not that much, maybe 30 or 40% of it, move into subnets. So, but so far it's moving, like that. You can see the lines are moving in the right direction, but it's just sort of, I think, slower than what I would have guessed. But I do think when we do have a number of Solana bridges coming up, which will enable people on Solana to just be like, hey, I got a bunch of Solana. I just want to swap into a subnet token. I don't really know how this works. I don't really care. Maybe I don't even care about the emissions. I just want to ride the price appreciation because I like Targon or I like Shoots or whatever. And I think it's going to 10x, right? And I think once the Solana liquidity gets in here, if it's done right, if it's done honestly, then I think we should see we're going to see a lot of people flood into the ecosystem, and that should start changing the equation. I think even, the who's in root and who's in subnets.
Yeah, for sure. And I think we're seeing a lot of bridges kind of like starting to, get integrated now, like Hyperlane's integrated through TaoFi. And I think they're the ones they're one of the ones who are looking into doing more of a bridge, right? But Hyperlane's kind of underpinning that. People are looking at doing layer 0. Right, so all these kind of popular bridges that connect many other EVM chains, and then hopefully we'll see that like this liquidity kind of coming in and kind of making things kind of shake them up.
Yeah, I'm aware of about 6 parties that have some form of a bridge underway, right? And most of them are targeting Solana first, but also Ethereum. I know Sturdy has said that they're targeting publicly that they're targeting Ethereum, and I think Base as well. So, yeah, I mean, I think those are the right chains to target, as well as my favorite Sonic. So because I think Sonic is awesome, but hopefully we'll see Sonic in there as well. So, but yeah. All right. Well, Cameron, Vune, thank you so much for spending some time with us.
Yeah, thanks for having me.
Yeah, dude, total pleasure to speak with you. All right, everybody. My name is Mark Jeffrey. This has been Hash Rate. We'll see you all next time.